Alright, what's going on, guys? Today we're going to do a video on continuation trading and how you guys can clean up your continuation trades, because I see a lot of people getting burned on continuation trades, trying to take them at the wrong time, and I'm going to show you guys a quick fix and how to get higher quality, higher win rate, and all that stuff like that. Before we get into it, guys, Alpha Future code LukeX, use that, support the channel. Check the Discord, free Discord, all that stuff. Check the links in the pinned comment if you guys want to check any of that out. My other social medias, go check that all out. And let's get right into this. So what you need to do is you really need to follow this list right here. So what I wrote down was step one, basically, for continuation trading. This is to how to get the highest quality, the highest win rate in your continuation model trades. For me personally, I trade discretion, so I trade continuations and reversals, but today I'm going to be focusing strictly on continuations, because continuations are a lot easier for most of you guys until you build that discretion up. For beginners and stuff, I always recommend continuation trading because it's literally the easiest thing ever. So what you want to do is, number one, wait for price to displace towards your draw on liquidity. Number two, wait for a retrace, which could be into an imbalance, which is what I use. And you're going to take an entry. It doesn't have to be the same entry as I take. You could take an inverse for value gap. You could take a CISD, displacement, or something like that. So here's the problem with what you guys do, okay? Let's say we have a bullish bias. We have London high, we have Asia high, and we have previous day high as our main draws and liquidity. I'll go over like a bearish example, but it's the same thing. So what a lot of you guys will do is you'll see price down here, you'll see it pull into a gap, and you'll say, oh, like London high is the draw, and you'll long, and boom, you get stopped out, okay? Now what's wrong with that? We are super far away from London high. Now, is this to say you can't catch a reversal and then trade that up to London high? No. But if you're trying to look for a high probability continuation model, you want to see price displace towards the draw on liquidity that you're looking to target, pull back into an imbalance, fair value gap, just some type of retrace, get an entry, and then target the draw. So let's use this example first, okay? Let's say London high is our draw. Market opens up, we get some displacement up, boom, we start trading towards the draw on liquidity. Let's say we want to see price displace aggressively towards London high, give us a pullback, and then take the trade to London high. We don't want to be trying to long down here because we don't know if price is going to want to take us out, manipulate first, and then go. We want to wait for price to get displaced towards the draw, show that it probably wants to continue to that draw, give us just a pullback for an entry, like I said, into a fair value gap, whatever. Take our entry, whether that be inverse fair value gap, displacement candle, just something to confirm that price is likely going to continue higher. Put your stop here, boom, target the draw on liquidity. That's it. You're looking to just catch the last leg of price. That's all you're looking to do for this type of continuation trading. You're looking to catch the last leg of price to the draw on liquidity. Now, here's another thing that you guys do. With how this market's moving, it's moving aggressively at market open. So what I've seen, this happens all the time. Market will open up and it will just aggressively displace towards London high, okay? And now two things will happen, what you guys will do. Not all of you guys, but what a lot of people will do. It'll come up and take out London high. You'll have the ones saying, oh my God, it's going to reverse. And then they try to take a reversal and then they end up getting burned, okay? That's trader number one. Trader number two sees it take out London. They go, oh, we have Asia high. They try to long right here, and then price stops them out before continuing in the direction that they knew it was going to go. So how do you avoid this? Number one, if price comes up and takes out London high and you think it's going to come down because maybe we have an unfilled fair value gap or something down here, you want to wait for something clear. You want an S&T, you want an inversion, a retrace, displacement, and then you can short. But we're not talking about reversals in this video, but that's where you'd be looking to short. You need clear shift in ordered flow from bullish to bearish in this case. Now, market opens up, takes out London high. Okay, you're like, oh my God, like what do I do? You don't try to long right here. You wait for price to displace towards the next draw. This case is Asia high, so you wait for price to trade towards Asia, displace aggressively towards Asia, and show that it likely wants to continue to Asia high. Then you wait again for that retrace, fair value gap, entry, whatever, take the trade to Asia high. So again, price passes London high, displaces towards Asia, confirming that it likely wants to continue to Asia. Price pulls back, gives you an entry out of a fair value gap. You take the entry, displacement, IFEG, whatever, boom, target Asia. Let's say market opens up even more aggressively, okay? Let's say it goes like this. we start trading up and we don't get an entry here. We maybe get a tiny pullback, boom, displaces towards previous day high, pullback, boom, you could get in here. All you want to see is price displace towards your draw where you think price is going to go. It doesn't have to be an Asia high, it doesn't have to be London high, it could be a fair value gap, a higher time frame gap, a daily high, whatever it is. You want to see price displace past this draw or displace towards the draw, give a pullback, and then you look for the continuation. All you want to be doing is trying to catch the last leg. And like I said, if price already took out the first draw, but you still have conviction that it wants to continue to the next draw, you want to see price displace past the draw, pull back, and then give you that entry. Again, you're just looking for the last leg. But to confirm that we're likely going to go higher and the probability is in your favor, you want to see price displace past the first draw. If you missed it, then wait for the pullback, then get in, okay? Now, we can look at a bearish example. Just give me a sec. I'm going to set it up, and then we'll do that, and then we'll get into some actual chart examples. Okay, so now, bearish example. Let's say you have a bearish bias. Maybe price is delivering out of a 4-hour bearish gap, and you think price is going to take the sell side draws. You have London low, Asia low, and previous day low. Let's say you wait for price to displace towards London. You wait for price to pull back, and you're just catching this last leg out of a fair value gap to London. Let's say you don't catch London. Let's say you miss the trade, but you still have conviction it goes to Asia. You want to see price displace past London, pull back, and then you take the trade on the last leg to Asia. Let's say market just aggressively moves through London and Asia low at market open, but you still think we're going to previous day low. You wait for price to displace past Asia low and show confirmation that likely wants to continue lower, pull back, get in on that pullback, target Asia or previous day low. You're waiting for price to displace, pull back, and you're taking the last leg as a continuation trader. A lot of you guys, again, are making the mistakes taking the trade too early, but you want to see displacement in your favor first. So it's pretty straightforward. Wait for price to displace towards your draw on liquidity, whether that be session high, session low, previous day high, previous day low, higher time frame for value gap, whatever. Wait for a retrace into an imbalance. So this could be 15 minute, a 5 minute, a 3 minute, a 2 minute, 1 minute. I usually prefer 3 and 5 minute and 15, but sometimes I will take it off the 2 and the 1. It just depends. And then for your entry, you're just looking for an inverse for value gap. You could take the highest time frame between the 1 to the 5 minute. You could take a CISD. You could take displacement. Whatever is going to show you and give you confidence that price is going to continue to that next draw on liquidity. So let's get into some real chart examples really quick. All right, so here's the first example that we can get into. Now, let's say we have draws on liquidity here. We have London low, which has already been taken out. We have Asia low. We have this 1 hour gap down here. Those are our main draws on liquidity, but our next one that we're concerned about is Asia low. So like I said, we swept London low. If we want to continue with our bearish bias, we want to see price displace, pull back, and then give us an entry to target Asia low for shorts. So let's watch through this. Price displaces through. Now we just need to wait for an entry, okay? We get a little bit of a choppy. This isn't like the greatest example, but let me just click forward here. I know there was an entry. I probably just missed it. Oh, sorry, it was right here. I wasn't paying attention. Okay. Price gets through London low, and it chops around for a while. We consolidate after we sweep London low. From here, we displace lower, but what do? We pull back, right? We have the draw on liquidity below at Asia low. Let me just flip this over here so you guys can see it. Okay, price delivers past London low, and we displace, and now we have a pullback into this 3 minute bearish fair value gap. Now, what am I looking at? Again, bearish bias. We displace through London low. After consolidation, we displace through London low. We get a retrace, and we're looking to catch the last leg down to Asia low, okay? So what am I doing? We're in this 3 minute gap. I'm looking for some type of entry confirmation, whether that be an inverse fair value gap, displacement, whatever. So what do I notice? I know we have these 2 1 minute stacked up gaps. Let's see if we can get an inverse here. Let me press forward. Okay, boom. We get this nice inversion right here. We get this strong displacement candle. You could run your stop here. You could run it here, whatever. You could go break even at this internal low, and then you could target Asia low. Okay, let it play out, and boom. TP would have gotten hit. You would have gone break even here. You wouldn't have been taken out break even, and then you would have targeted Asia low, and you would have hit this trade. So let me break this down one more time. First draw on liquidity for the sell side is London low. So if we displace through London low, we get a retrace. We're looking for a continuation short to Asia low, but we only can look for the continuation short if we displace towards Asia low and confirm that we likely want to go lower, get the pullback, and then short. So what do? Again, we take London low, we kind of consolidate, but we displace lower here. We get a strong couple candle closures down. We get a pullback into a bearish for value gap on the 3-minute right here. Let me just erase this so you guys can see it a little bit clearer. We pull back into this 3-minute bearish for value gap and we respect it. Now we're just looking for an entry confirmation. We could take this 1-minute inversion. As you can see right here, we get this 1-minute inversion with the strong displacement candle. You could run your stop here. You could run it above the gap. It doesn't really matter. And you're targeting the next draw on liquidity, which in this case is Asia low. So now we're going to go through a bullish example, and then you guys pretty much understand that there's really not too much else to go over. So I'm going to get a bullish example, and then we'll be right back. All right, so now we're going to go through a bullish example. Let's say we come into this day right here, and we're long bias, right? We're saying, okay, if we come up, we have this high right here, we have Asia high right here, and then we have this small 1 hour first presented fair value gap. Those are my draws on liquidity for buy side. So if we come up, I want to see, price take out Asia. If we trade above Asia, I want to see price displace, pull back, and then trade towards this gap, potentially maybe towards PM high. So let's wait for market to open up. Okay, market opens up aggressively to the upside, and we already take out this hourly high, we take out Asia high, but we still have that 1 hour first presented gap, and you can also see we have kind of this low resistance liquidity up there as well. So what am I waiting for? Price is already displaced towards my next draw. In this case, my draw is that 1 hour unfilled gap, so I'm waiting for some type of retrace in order to take this trade. As you can see, price wicks into this 5-minute bullish for value gap. I'm scaling down at this point and I'm looking for an entry. Okay, we tap off this 5-minute gap. We get a highest time frame inversion, which in this case is this 2-minute gap. Nice displacing candle. Take the entry, stop right here, target the next draw on liquidity. You can tighten the stop up a little bit if you want to give you a better risk reward, because you probably don't want to see price come below this candle. And if you target the next draw on liquidity, you obviously just would have hit TP, which was again that 1 hour unfilled gap, which was the first presented gap, which is a very strong draw for price to go towards. So once again, market opens up aggressively to the upside. Most people are kind of getting freaked out at this point. They're trying to force reversals, or they're trying to FOMO into longs. What do? We notice, okay, we already seen price take out Asia, but our next draw is that 1 hour unfilled gap. So if price displaces towards it, pulls back into a fair value gap, I can look for longs to continue up there. Price displaces aggressively. We pull back into this 5-minute gap. We look for an entry. In this case, I'd be looking for the highest time frame inversion, which was this 2-minute. You take the 2-minute close right here, you get in, stops below the 2-minute body or whatever. Try to get at least a 1-to-1, target the draw, boom, and you hit TP. So that's literally it, guys. Again, you just want to see price displace towards the draw. Give yourself a retrace into a 3-minute, 5-minute, whatever for value gap, whatever works for you. And if you don't trade imbalances, you could just wait for some type of retrace, and then you're looking for an entry confirmation, which would be an inverse for value gap. CISD displacement, it's really up to you, but all you're doing is looking to catch the last leg to the next draw on liquidity. So that's it for me, guys. Hope you guys enjoyed this one. Hope you guys learned something and can use this in your trading. That's it for me. Again, Alpha Futures, link, sign up in the pinned comment, Discord, all that stuff's down there. That's it for me. I'll talk to you guys in the next one. Peace.